Now, many tech companies we know have been ramping up AI investments to capitalize on the artificial intelligence hype. Mega tech firms, corporations, utilities forecasted to spend around $1 trillion in CapEx in the coming years to support AI, according to Goldman Sachs. Workday among those tech companies looking to keep up with the AI opportunities. Company recently revealing new tools to accelerate the future of work with AI. And Workday CEO Carl Eschenbach, along with Yahoo Finance's Brian Sozzi, joins us now to discuss. Welcome, guys, both to the show.
Thank you, Josh. Thank you, Brian, for having me. It's great to be here. And also, thank you for being a great customer of Workday here at Yahoo. I know last time we were together in Davos, you talked about using the platform.
I was just on the platform trying to unlock productivity there.
Oh, there you go.
Good stuff.
Well, we can help you with that, I think,
know you could.
Right? And definitely our new AI agents can help you guys with that.
I want to get into that, Carl, because you had this big user event, right? You launched the next generation of Workday AI. But one question on the street, and I know analysts have this question because they tell me they have this question. They say, what does AI ultimately mean for Carl's company? Because their point is, if this megatrend is really going to be successful, couldn't that potentially really dramatically temper employee growth looking ahead? And if so, is that a headwind for Workday? How do you answer that question?
Yeah, so let's first start with the AI trend we're seeing out there. We, like many, Josh, believe we're in the biggest tectonic shift we've ever seen in AI. We've had many different tectonic shifts over the year, cloud, mobile, social, but never something as potentially powerful as this. And we do believe, absolutely, it is a big trend and it will become a huge lift to employee productivity in the future. It will impact everyone. That being said, we also do believe, to answer your question, right, we will peacefully coexist with this technology, just like we always have in the past with other big technology trends. And we think what will happen is, by leveraging things like AI agents and AI bots, we will accelerate how people work, we'll assist them, and then we'll ultimately be transforming business. And we're going to move from a world where today we work with technology, and we're going to leverage AI now going forward where AI is working for us in the background. And we don't believe necessarily we're going to see this big decrease in employment. We just don't. We think we're going to peacefully coexist. People will move on. They'll find new tasks. They'll become more productive and not be doing the mundane tasks. So we probably think it's slightly different than how you positioned it. And we think it will drive growth for our companies because we'll have productivity gains through the use of this. And our motto is, we want to augment human productivity. We don't want to replace it. And we fundamentally think with a platform like Workday, supporting your people and your money, that's exactly what we're doing, like folks here at Yahoo.
I'm really interested in what you're building with Workday Ventures. You've taken stakes, made investments in really a host of companies. What are some of those companies, and what are you pulling from them that might ultimately end up on Workday?
Yeah, it's a great question. We do have a corporate ventures arm where we're making investments in companies. A lot of these companies are AI. We want to stay as close to the startup community in AI as possible. And ultimately, some of them may even become part of our company through an acquisition. We've done that just recently over the last 6 months. Some of the companies we've invested in are now part of us. And we fundamentally also want to stay close to that community because we want them to build and run on top of the Workday platform. We're not just an application anymore. We're both a best-of-class application and a best-of-class platform. And all the companies we now invest in as part of our corporate ventures arm, we're bringing them onto the Workday platform and seamlessly integrating them into the Workday platform so you can get access to our data and drive deeper insight for our customers. So it is a strategy. It's a 360 strategy to keep your eye on the market, to invest in what we think are the most innovative technology companies, and lastly, to get them on our platform, and ultimately they may become acquisition targets for us.
Maybe you could put on your Sequoia hat from your times there. You're working the models. Maybe I can ask it this way. What do you think about the valuations on some of these companies that you're investing in? And then, Josh mentioned during break, look at OpenAI, $157 billion valuation, and they're losing billions of dollars. Does it feel out of control here?
I think today, when we're doing investments, I think the valuations have absolutely moderated. There's a stark difference between valuations today when you're investing in these companies than what we saw, if you will, 2, 3, 4 years ago. I think the valuations have run up. they've moderated, and I think founders are more open to more realistic valuations. So I don't think we're paying, above market rate for valuations. I think they've actually moderated quite a bit.